right. Hello, founders. Welcome to another episode of the Gab Lab. It is great to have you here. This is a show that shares financial intelligence that will not only blow your mind, but will build your bottom line. I'm your show host, Tanya Woods Richardson, and today's episode is championed by our friends at Community Futures Manitoba, 16 offices across the province of Manitoba to help business owners with their business and to help them nail the numbers. So today's episode, we are joined by Nail the Numbers Pro, Pamela Meger, Senior Vice President with MNP Limited. Welcome, Pamela. Great to have you here.
Thank you so much for having me.
Well, today's episode, it's long awaited by a lot of founders. I know there's a lot of questions that are coming up. And today we are talking all about debt and dealing with debt. And I'm sure this was a tough conversation to have before COVID, now through COVID. I feel like it's compounded the issue for people. So again, so appreciate you making the time to share your insights with founders today across Canada. So we talked about, for everybody that's tuning in, if you don't know what we do with each episode, this topic of debt, we're going to break it down into 3 segments so you can kind of digest the content as it comes out. Pamela, I think we talked about our 3 segments being the cost of debt, so kind of understanding that application, then moving into how to better manage the debt that we have, and then some potential alternative solutions. So if you can't manage what you have, what your go-tos are with respect to next steps. Does that sound about right?
That sounds perfect. Yeah.
Okay. Now, one of the things that I loved about your story when we were talking and getting to the why of doing what it is that you do, I hope it's okay that I share it here, but you used to be in the medical industry, right? It was ambulance driver?
EMS, yeah.
EMS. And so you talked a little bit about the parallels between what you did then and what you did now, or what you do now, and kind of this life, death situation, which a lot of people feel. You don't see it as life and death when it comes to debt, but a lot of people in that stressor mode are like, what are my options? Can you speak to that a little bit and just that experience and how that you bring that into MNP?
Absolutely. It was, I got into this career by mistake, to be honest. I had an injury, a back injury, that precluded me from continuing on because that was my passion. I loved being able to help people in a moment where they truly needed it. It potentially was life or death. So, when my back injury would not allow me to get patients into the ambulance, it became a problem, obviously. Tried rehabbing, it just wasn't safe for me to carry forward. So I had to find something new. And I thought, wow, what a difference. Monday to Friday, 9 to 5, what would that even feel like? So I applied, I got in an accounting firm. So adrenaline junkie to accounting. What the heck, right? And then they have this little branch, insolvency. And I was like, hey, I'm dying in the accounting world here. What else can I do? And that's when they introduced me to insolvency. I was like, well, if it doesn't have anything to do with accounting, let's give it a whirl. But then I realized when I started to meet with people that it is life or death for them as well. Like it's typically their business, it's their passion, it's their baby, and they're losing it. So there is a lot of raw emotion. There is a lot of that, but I can provide them with some solutions. This is how you need to move forward. Hopefully we don't have to get involved. Maybe we do, but it doesn't matter. We'll walk with them that whole way and hopefully get them up and moving through the process. Again, no one wants to kind of be on it. I always explain it as I never meet people who are on typically a smooth road. They're always on a bit of a bumpy road.
Especially in entrepreneurship, right? Always bumps along the way.
Yeah. And if bankruptcy or insolvency has to be involved, that road is bumpy too, but it ultimately does have an end. So never really smooth sailing because you're not meeting me typically under those circumstances. But, there's a plan and someone to support you through that plan. And so I actually got that great feeling again that I'm able to help people that are emotionally in disarray moment. Yeah, don't know exactly who to talk to. It's embarrassing, maybe you've lost everything. So just getting them through, like, there's no shame in asking for help.
Well, I think that's huge, Pamela. The whole shame thing, finances in general, especially in this country, I feel are cloaked in a lot of shame and a lot of guilt and a lot of secrecy. And so it's a big piece about why we're doing this episode specifically, to let people know that they're not alone out there, right?
No.
Even before COVID, our failure rate, I don't like to use that word, but there's a lot to be learned from failure. So it's not a bad word, but there's, we were experiencing an 82% failure rate due to poor financial management. So I think, first of all, no shame in it. It's about bringing it out in the open. And I'm just looking at one of the notes here that you shared with me. Your job is to help people avoid you, right? Like don't come to me when it's too late. Like, let's see what we can do to prevent all of that from happening. So let's jump in with, when we're starting to look at the costs of debt, is it okay if we actually take a look at what is debt? Because I think people oftentimes associate debt with, credit cards and maybe lines of credit. But I know when we chatted, you're like, there's more to it than just that. So what do you consider debt?
Debt, I would say, is anything, you purchase iron for your big equipment for your building. So all your leases, all your operating lines you have, and a lot of people miss or don't necessarily put into the budget your Canada Revenue Agency obligations. So those ones sometimes get missed. It's a lot of what I see. People don't understand how that really affects your business and how it can really stop things almost immediately if you aren't aware of what those are.
Mm-hmm.
Of course, your traditional type credit cards, your fuel bills that you use if you run fuel accounts, any kind of accounts like that sometimes people don't know exactly what it means when they decide to call those types of things and the importance of that. So a debt, I would just say anything that you need to continue to operate your business.
Gotcha. That's you're taking from the past, right? That's sitting there in the past. So accounts receivable, any past CRA, lines of credit cards. You also talked a little bit last time about leases.
Yes.
Yeah.
Leases are significant. I've worked with a lot of companies in the last probably year and a half, where they've had some fairly significant lease payments. And sometimes lease payments are not always just monthly. They can be quarterly, yearly, just depending on what type of business you run. But those payments are significant. But with lease payments also come insurance payments, fuel, repairs that go with that. So I've spent a lot of time with companies really looking at their assets to say, okay, do you need this? Is it a day-to-day equipment? Or is this maybe something you could rent for the one-offs that you use it? Therefore, you're reducing potentially your fuel, you're reducing insurance costs, you're reducing lease payments that are required. So it helps manage the cash flow a little bit better throughout the year. Obviously, cash is king, especially within this economy right now. Right. And so anytime you can reduce some of that, it really will help your bottom line. So we've looked at that downsizing. Do you need, 3 combines, or do you just need these 2? Right. Or, really having people look at their equipment, because as you operate business, you just accumulate things as you go.
Yes.
And you keep moving forward, and that's okay. But sometimes when you start to have a little bit bumps in the roads, you got to look at those expenses to say, okay, I actually need to trim a little bit just to stay above water. And
gotcha.
So I've done quite a bit of work in that area with people, is really looking at what you need versus is there any way to rent that or have a service come in and just provide it for you as a one-time cost versus carrying it the years.
So, so if it feels like if we get back to the topic of debt, we're going through the different debts that people may have. So these, I'm going to use the word burden, but these are responsibilities that you're obligated to pay. You've probably amassed or accrued these numbers to date, right? Whether it's on the credit card or line of credit or the past CRA bills, both personal and business. I see a lot of founders that have neglected to pay their personal taxes from the draws or the dividends that they've taken home. and I just want to make the distinction with lease, because we got into a little bit about potential expenses that are future based, but sometimes the burden of debt when it comes to a lease or maybe some of these other expenses, is that because it's tied into contractual obligations, because people sign a year lease and now they're sitting, 1 month into the year, and now they would be financially obligated to pay back to account for the 11 months that fall into the completion of that term. Is that what we're talking about? Is that how debt falls into?
Yeah. I would say most leases are, that 3 to 5 year.
Okay.
So you've committed to a 3 to 5 year payment, right? Whether your business can produce the income to cover those lease payments, you still have to figure out how to make it, right? Especially what I see is you have a big piece of equipment, it breaks down.
Yeah.
You have to come up with the repairs, but now you've lost that income that piece of equipment. So I'll say a semi is pretty common when I see on. So your semi breaks down. Now, if that semi's not generating money, you're now starting to look at your other areas of business to pull money in to cover what this semi can't do. And now you have to come, $30,000 to fix the engine because you can't, so it's a lot of people will budget for it when it goes perfectly smoothly, but they don't necessarily budget for a repair, major repair. Changing tires on a semi is not a small cost, right? Fuel change in itself is significant, right? So it's really making sure when you're taking on those big bites on leases, you're looking at projections as far as making sure you're putting in a buffer for repairs, for tires, for oil, for all the things associated with that operating that equipment. And that's sometimes what people miss, and they think, well, it's a brand new piece of equipment, it'll be covered. I see a lot of time it is not. So just being a little bit of aware of those types of things and then budgeting accordingly.
Beautiful. And I think, that ties into to comments that we've heard in past episodes. And one of the things that I love about having experts on, our pros like you, is, all of you really do say the same thing. It's about in your own unique way, but it is about understanding the numbers, understanding the costs and consequences. We had Dustin on that was talking all about equipment. And to that point, he's like, you have to budget your downtime. Right? You have to make sure that this isn't a piece of equipment that's going to be running at 100% capacity. You have to budget that in and understand the costs and consequences. And so I love that this message is getting repeated, because sometimes these messages, we need to hear them over and over again from different people in different ways so that they finally land and we start calculating the numbers. Okay, now I know this is an area of passion for you, and you opened up a lot of windows for me. The blinders came off when we started talking about the obligations and the costs associated with this debt. So I think a lot of people start thinking about obviously the interest cost that's attached to debt and what are the penalties there. But tell me a little bit about, you started to get into this understanding of our liabilities and our responsibilities as directors of a company. And I think maybe for the founders listening in, we might need to clarify who is a director, because it's not necessarily just the business owner, right? The manager. So maybe clarifying who that is and what their obligations and responsibilities are to the debt.
Yeah, absolutely. I spend a lot of time with self-employed or owner operators of a smaller corporation, and even right up to the bigger corporations. It's director's liability is something it can be very complex to understand, but it is extremely, extremely important. And this is one of my sweet spots. I do really, sometimes I think, oh my God, Pam, like, why are you so excited about learning about this stuff? But it is so, so important to be successful going forward, to understand these obligations. So director's liabilities are debts that the company, the corporation, and or a sole proprietor, it will fall back to you as a director. So being a director there's a lot more skin in the game, for sure, from a Canada Revenue Agency perspective. Directors are personally liable for source deductions, payroll, GST, whichever province you might be in, HST. If you're in a bar or where you serve liquor, the liquor tax. So you really have to ensure you're on top of those obligations when you're operating a company. Because if the company can't pay those debts, first of all, their collection activity can be quite aggressive as well. They don't necessarily have to go through the same channels as a credit card or a fuel company. They can simply just issue what's called a requirement to pay. That's what they call a garnishee. And your bank account is frozen immediately.
So this is the bank account that's frozen, and sorry, I'm going to call them a lender, but the lender who has the power to do this, is this just CRA or is it anyone?
Just Canada Revenue Agency, and of course for PST, for here it'd be the province of Saskatchewan. But
okay.
You know, as each province, they will have their regulator. But for those types of taxes, yes, they can just simply issue those. Obviously, now if your account is frozen, it's very difficult to operate your business.
No doubt.
Right?
No doubt.
And so what they can collect from the company, so they can go after bank accounts and they can seize assets that aren't secured by other lenders. They will go to you personally for whatever's left over. And that's actually what I see a lot of. Probably 50% of what I file every month is due to their director's liability for the payroll or the GST in or PST in our province. So it has a significant impact to our business here, because it's one that you can forget about quite easily.
Right. So two things there, I think, just diving into it, I'm feeling tense in this conversation. I'm sure that founders are probably, their stomachs are dropping in this conversation. CRA must have a process that they go through that would enable them to actually enact that decision of saying, we're freezing your account. This shouldn't, my guess is, so please correct me if I'm wrong, my guess is this shouldn't come to a surprise to a founder to have their account frozen. It's probably because they've been neglecting communication or due process along the way, right? They're not going to wake up one morning and their account's frozen.
Typically not, no. So it's really important that you maintain correct information with Canada Revenue Agency and your provincial regulatory bodies so that they can always contact you, because even if they will use whatever's on their account last as true, and if they can't get you, that's maybe sometimes where a surprise comes in.
Okay.
And sometimes I see them, people kind of freeze sometimes when they get so stressful, and it's not out of anything else. They just simply don't know what to do. Absolutely. So they kind of spin in circles a little bit, and so don't necessarily communicate the best, and that will instigate that. So typically you will get letters. They don't email you anything, so an email address is not super helpful with them, but they will send letters and they will attempt to call. So making sure you have that. And then sometimes even if you're talking and you just can't get going after some time, they still may issue that on the grounds that they're trying to force you to do something.
Okay. So, and this brings to light actually just all of the scams, right, that are out there right now, right, with the calls. So how we distinguish the true call, the authentic call from CRA versus the scamming call with those masking and putting out there that they're CRA and your social insurance number has been breached and call us, or there's lawsuits out for your arrest. Right? So is there something that a founder can actually watch for or listen for if they've received a message or a voicemail from CRA?
If they have reached out to you, they will typically leave you a contact number, but you can also verify with them. They all have a badge number. Like they all should be able to reference a badge number and a contact number back. They have kind of gone across Canada, so you won't necessarily in Saskatchewan get a 306 number back. Someone from Manitoba, Alberta, BC could potentially be calling you. But I always say if someone's initiated that call, to say thanks, hang up on them, and then actually go through either the 1-800 number right from Canada Revenue Agency's website, customer inquiry line, I think they call it. But I would just reach back out to CRA directly if you're ever unsure. Don't necessarily share with the person initially on the call. Just say thank you. I'm going to call my local office and see if this, and then you've initiated that call, you've called the legitimate number, and then you can verify that way.
Okay, perfect.
A lot of the time the letters are like how they'll make initial contact is through a letter.
Okay. And then obviously taking the information from that letter and then following up with the specifics that they've given you there. And so just for founders, again, just to clarify who is actually recognized as a director, I would imagine they would refer to their articles of incorporation, right? These should be updated annually that are going to list the actual directors that potentially are on the hook for the obligations of all debts for the company, right? Did I get that right? Is there something else?
Yeah, with directors, you can do through the corporation branch search, and it will list your directors, your shareholders. So different obligations for directors, shareholders, but your directors will be listed there. Directors only have that responsibility for those few debts or anything else they make themselves liable for. So whether they sign on as a personal guarantee on the operating line. So not all directors might not be responsible for that because they didn't sign for that. So they have to have made themselves liable. But directors' liabilities, you were deemed liable the second you sign on. So a lot of people is like, well, I'll just resign. Okay, but you're still responsible for those debts from the time you started to the time you left, regardless of whether you resign or not. So you're not going to get away. So I always tell people with some due diligence on that, especially on the silent partner side, like if you're not actively involved in the company, ensuring that those obligations are paid, not just seeing a check, but making sure it clears the bank account. I've seen that happen where the checks are provided, they sign off, but the checks are never sent in. So making sure they actually clear the company bank account. So whether that's through regular meetings of the directors or whichever, but if you're a silent partner, or a lot of it, we have one's the paper side of the company and one is the guy who gets that physically does everything.
Yeah.
So making sure those two communicate on a regular basis that the payroll is being remitted and paid, because it's not 50-50.
Yes. So
CRA
due diligence, due diligence, check it every step of the way. I know that I've worked with business owners in the past who have lenders, angels, high net worth individuals putting money in, and not necessarily the angels, but people getting engaged in business and lending to business and thinking, you know what, I want to take an equity position in this business so that it protects my investment and I have a say with respect to votes at how this business is going to go, but failing to recognize their obligation financially for all the decisions and all of the debts incurred from that point that they sign on. So know what you're getting into.
Yes. Yeah. And if you're going to be that director, just getting involved for sure.
Getting involved. So we've talked about what types of debts there are. We've talked about the costs with respect to obviously the interest costs, the obligations specifically, and that cost going forward. We also talked a little bit, not in this episode, but before, we talked about the cost of your ability to borrow in the future. So the debts that you're holding on to now, how that impacts your ability to actually access capital going forward. Can you speak to that a little bit?
Absolutely. So a lot of people, when I kind of go back to the Canada Revenue Agency debt, because it really has the most
big impact.
But if you do go to a bank and you're looking for maybe to extend your operating line because things are a little tighter to allow you some wiggle room, lenders typically will shy away, and it's not 100% of the time, of course, but they will tend to shy away from you if you have that GST or PST or Canada Revenue debt outstanding, because they understand that even if they lend to you and you have CRA debt will always come number one, and they can never be number one. So they don't want to lend to you unless they know they have a security position. So you will run into a harder time borrowing or extending credit if you have some of those obligations to pay. Same as if you have some of your creditors maybe have got a little excited and started a statement of claim. Those will definitely add a little bit of a nick. So a statement of claim is the beginning part of they're going to sue you so that they can seize bank accounts or send notice or garnish or anything like that. Other creditors have to do that. CRA doesn't. They just have to get a paper signed and it's issued. A statement of claim, if you're starting to see those to come through your company, you should really be speaking with someone fairly quickly, because again, they can change the game a little bit.
Wow.
And maybe it's a matter of just financing out that line of credit a little bit to get rid of the guy who's issued a statement of claim. I always kind of think of it as the person issuing the statement of claim may be in a little bit of hot water himself. So he's trying to get into there, right? So it's not necessarily that you've been bad or anything. It's just they need the cash into their company. And I'm seeing a lot of that. It's not that I'm so mad at company ABC. It's just like, I have to get cash flow in, else I'm going to lose my company.
Right.
So you're starting to see courts are opening up a little bit here in Saskatchewan. I know it is different provincially, but I'm starting to see a little bit more of that starting to happen. When COVID kind of hit, the courts laid off a lot of that, but it's definitely, the wheels are starting to turn again here.
Right.
So if you're starting to see some of that stuff, again, speaking to me doesn't necessarily mean that you're going to be in a bankruptcy or proposal immediately. It's just, okay, have you considered trying this, and this? Try these type, have you contacted these lenders, see if there's anything they can do to help you, right? Because we want to get you out of the hot water before it starts to boil.
The frog.
Yeah.
Right? The frog in the boiling water. And I love where you're taking this, because we are getting into some of the managing, right? How we can actually start to manage some of this debt. Before we move into that segment, can I ask you one more question? I think it's just on the cost. And in my role as a lender back in the day, it was fascinating to me how many people signed this document without asking me what they were signing. And this is the personal guarantee or the promissory note, and the cost of that. Because I know a lot of founders out there right now are thinking, okay, well, if I have to close the business, I have to close the business. Business goes insolvent. That's it. I get to wash my hands, and me and my family, we're going to be all right. Right. Mm-hmm. But maybe if you could just explain to our audience what a promissory note is and what the obligation or the cost of signing that note back in the day when they signed it, what that actually means to them, not only as the owner, but as from a personal perspective.
Sure. Personal guarantees, promissory notes are very, very similar. Basically, it's just saying that if, especially in a sole proprietor, it is you. So a lot of people will like, well, it's the company, but a sole proprietor is just Pamela Meger, Gyprock, right? Like it is just me, but they kind of get this, there is no separate entity, like there is necessarily in a corporation. Partnership is the same thing. It's just you and me. We have a business together, but it's us personally. So you always have a personal guarantee in a sole prop and in a partnership, typically if I've signed for that as well. But in a corporation, when you start to sign personal guarantees, it does mean that should that entity not be able to pay whatever it might be, that they are going to look to you for the remaining. There's all different kinds of levels of personal guarantees. It's almost impossible these days to have a lender lend to you without one. So it's not that try to find a lender that won't ask for one, because that would be very difficult.
I think it was after 2008, 2009. That's when I noticed everybody attached personal guarantees.
Yeah, 2008, there was a huge spike in insolvency filings. So you can see where they did the corrections, because they probably learned a little bit through there that we lost quite a bit without it.
Right.
Now, that doesn't mean that just wouldn't potentially have forced the people, but okay, how else can we protect? So this is what they've, and it's pretty common. So don't panic if you have them, just understand what they are. And I worked with a fellow a few years back. He had that personal guarantee, but we mitigated it. So it was a full guarantee for the loan. But as the company was more successful, we're like, okay, but maybe he can get a limit up to $200,000 on his personal guarantee. Then as the company became more successful, we went back to the bank, hey, let's drop this to $100,000. And we were eventually able to work out the personal guarantee because the bank felt more comfortable. It's a longer lasting business. The numbers have been good. So just being aware of where the personal guarantees, a lot of times you see leases for commercial space, you'll see them there. We catch a lot of people that way. It's like, hey, if the company can't go, the one I'm working on right now, it's $80,000 a month of a 10-year lease. He's 2 years in, right? So it's a significant amount going to drop back to them? And depending what the lease says, if they release, it probably will limit. But if like commercial space right now will be tough. So he's probably looking even at a year of that. That's a significant amount he's going to have to be responsible for. Right?
So the message I'm hearing in this is know what you're signing and do the math, understand the cost, because the personal guarantee, as you mentioned, is now they come after your personal assets to be able to mitigate some of that or recoup some of that expense, right? So now all your personal assets are on the line, your house, your car, your investments. And so unfortunately, I don't think enough business owners are actually really truly understanding what that document is and the costs associated with it before they sign it. So thank you for clarifying that and making sure. The intention of this episode is not to scare people. It's about creating awareness as to where you are now and how you start mitigating some of this risk. And, Pamela, when would you, I know we have 2 more segments to go in this, but when would you recommend people actually start reaching out to you? Because I think people probably leave it way too late.
Absolutely. And, and it's the longer you leave it, sometimes the less options you actually have available to you because you're in a tighter and tighter and tighter spot. So anytime you're really starting to where your focus is daily is cash and how you're going to pay everybody and who you're not going to pay, but we have to pay these people because we didn't pay them last month, it's probably a good time to start to reach out to one of us. So licensed insolvency trustees, we're regulated by the federal government. Typically initial consultations, I know with MNP are free of charge. So come get some information. We can give you some tips to lead you and to have you looked at all these things. Actually, if you just, we can just do a quick review of things, give you some suggestions or hey, like maybe we can do kind of a proposal to kind of put everybody on hold for a little bit, build up some cash, then we'll pay, so there's so many options. Beautiful. If we meet sooner.
So reach out, Pamela. I know we're putting your contact information in the show notes below. So as you're watching this, if you need to reach out with Pamela or to Pamela, her information is down there. But let's do a quick tap out. We're going to take a quick intermission. We're coming back for 2 more segments with Pamela. The next one is going to be about managing the debt that you have right now. What can we do to really just start getting your hands in there, seeing it for what it is and dealing with it. And then our last segment is going to be some of the alternative options, kind of the last resorts, if you will, that Pamela can share with us. So there's lots of options here. This is not intended to put you into panic zone and high alert. This is intended to get you to take action, take ownership of your numbers. There's a way through all of this. There is a light at the end of the tunnel, but you have to take action. You have to start looking at the reality of your situation, regardless of what that is. So thanks for watching. Please join us for the next segment. But before you go, make sure that you're downloading all of the playbooks, the free tools and resources. I know we have a debt calculator there for you. And go grab a cup of coffee, come back and catch us for segment 2, which is all about managing your debt. We'll see you in a bit. Bye for now.